I am Kim Rubin, Salt Price Fellow of the Tax Policy Center and Director of the State and Local Finance Initiative at the Urban Institute. It is my great pleasure to welcome you here today to be part of a conversation about how states are responding to changing economic and fiscal conditions, and specifically how they are changing tax policy to help families, especially those that may have been most affected by recent challenges. But first, some quick housekeeping. This virtual event is being recorded and will be posted online afterward, as will the slides presented in the first panel. All participants are muted, but please type your questions and comments into the Q&A box at any time. We'll be passing these on to our panelists, and there will be time for them to respond. While captions are on, you can hide them or adjust settings with the live transcript button. We encourage everyone in the audience to continue today's dialogue by sharing your thoughts or observations on social media using the hashtag #LiveAtUrban. And we would also appreciate it if you could take a few minutes and complete the post-event survey. So challenges have arisen across the country in the aftermath of the COVID-19 pandemic. But it's important to acknowledge that they haven't been felt equally across all households. Low-income families, immigrant families, and people of color have often been more impacted, seeing loss of income, loss of jobs, and a need to work in person while others work remotely, and higher mortality rates directly from the pandemic. And while federal, state, and local officials have responded, public benefits haven't always been accessible to all families. Governments have increasingly offered support in different ways, including direct cash assistance, expanding eligibility and generosity in means-tested programs, and lately through changes to state income tax policy. This has been mainly done by expanding eligibility and generosity of the state earned income tax credit, EITC, or state child tax credits. And these programs can be successful in helping alleviate poverty. For example, the expansion of the federal child tax credit last year led to large declines in the rate of child poverty and in declines of food insecurity among families with children. By the way, and as an aside, because I am a tax geek, while today is the deadline to file federal taxes that you may have gotten an extension for the 2021 tax year, the IRS has announced that families can use their free file software to access benefits until November 17th, 2022. So there's still time for some families to access these benefits if they haven't already. Today, we'll first be exploring the policies adopted in 3 states, Colorado, New Jersey, and Vermont, and investigate what changes were made and how they were passed. Then we're going to go deeper in Colorado and hear about how the tax changes work with other programs and gain insight from recipients. We're excited to be co-hosting this event with the Jain Family Institute as we expand voices heard and perspectives seen. I'd like to introduce Stephen Nunez from the Jain Family Institute.
Hi, Kim. Thank you. Hi, everybody. My name is Stephen Nunez. I am the lead researcher on guaranteed income policy at the Jain Family Institute, which is an applied research organization in the social sciences located in New York. A very large part of our work is looking at cash transfer policy more broadly, whether it be leading research on the Compton Pledge Guaranteed Income Pilot or the Partial Basic Income Program in the city of Marica in the state of Rio in Brazil, or doing policy simulations and white papers around the federal child tax credit proposals. So we are extremely excited and really honored to be here hosting an event together with the Urban Institute. I want to keep my remarks brief because we have a very full agenda for today and a lot of great panelists that deserve time to speak. But I'll just say that over the last few years, as Kim alluded to, while a lot of attention, of course, has been focused for good reason at the federal level, states have themselves been passing legislation to reform the child tax credit, their own EITC, or to create such a benefit for the first time. And with the realities of likely divided government headed our way at the federal level for the next few years, a lot of the action is going to take place at the states. So this is an opportunity for us to guess, shine a spotlight on activity that's already occurring and on the continuing agenda of advocates and legislators at the state level, and to think through some of the different approaches they've taken and some of the administrative and other challenges that they might face going forward. So I'm hoping that this is going to be an opportunity to begin, I think, a research agenda looking at this and shining light on this important topic. So without further ado, I want to introduce Richard Oxshire, who is a senior policy associate at the Urban Brookings Tax Policy Center. And he will be chairing our first panel of experts. So please take it away, Richard. Thank you.
Excellent. Thank you so much, Stephen. And thank you, Kim, both of you for those great opening remarks. My name is Richard Oxshire. I'm a senior policy associate at the Tax Policy Center, and I'll be moderating our first panel where we're going to dive deep into the policy and the politics that are driving the expansion of cash aid programs like the Earned Income Tax Credit and the Child Tax Credit at the state level. And specifically, we're going to focus on recently enacted legislation in 3 states: Colorado, New Jersey, and Vermont. And to make sure we're all up to speed, I just want to give a real brief introduction on what these states have done over the past few years so that the panelists can dive right into what they want to talk about and not get bogged down with this. So let's start with Colorado. In the past few years, Colorado has increased its state earned income tax credit match from 10% to 25%. At the state level, when states provide an earned income tax credit, it's typically a simple calculation as a share of the federal credit. That is, a filer will calculate their federal earned income tax credit, and then when they go to their state form, the state will say, take X% of what you got in your federal return and put it on your state return. So Colorado significantly increased its tax relief for EITC eligible households by increasing its match from 10% to 25%. They also made more people eligible for the state credit by making ITIN filers eligible for their state EITC. And ITIN is an individual taxpayer identification number. These are typically used by undocumented workers who don't have Social Security numbers. In order to claim the federal EITC, every member of the household must have a Social Security number. But in Colorado, they say, even if you are not eligible for the federal credit because you have an ITIN, you can still claim the Colorado EITC and get that tax relief on your state return. Colorado also recently created a state child tax credit. Colorado's child tax credit is calculated also as a share of the federal credit, but those calculations vary a little bit with income, with lower income residents getting the largest credits. It's available to families who have children younger than age 6, and it's also available to children who have ITINs, because at the federal level, a CTC is only available to children who have Social Security numbers. The Colorado child tax credit is income restricted, and that the credit phases out between roughly $25,000 and $85,000. So filers earning above that are not eligible for the Colorado state child tax credit. It's also worth noting that when Colorado is making all these changes, they also had to cap and limit some other deductions to get these bills through their legislature. Moving on to New Jersey. New Jersey also recently created a state child tax credit. Their credit is a $500 credit per child. It's available to families with children who have children younger than age 6. It phases out between $30,000 and $80,000, again, with filers earning above that and eligible for it. It's also available to children with ITINs. New Jersey additionally made its EITC available to more people by making all childless adults eligible for their state earned income tax credit. I put childless adults in scare quotes there because what I'm referring to are filers who do not have children on their tax return. They very well might have children, it's just that child is being claimed by another adult. This is important because at the federal level, the EITC is only available to filers ages 25 to 65 if there's not a child on their tax return. But in New Jersey, they say all adults are eligible for their state EITC. And that's important because New Jersey has a very generous earned income tax credit. It's 40% of the federal credit, one of the highest matches in the country. And finally, in Vermont, that state created a new child tax credit. Their credit is $1,000 per child. It's available to families who have children with who are ages 5 and younger, and their credit phases out between $125,000 and $175,000. Vermont also increased its match, again, percent of the federal credit, from 36% to 38%. So Vermont also has one of the more generous EIT fees in the country. And then, as we'll get into, it's worth noting that in order to pass this legislation, Vermont made other changes, such as expanding a child independent care credit, increasing exemptions for Social Security income, military pension income, and allowing filers to fully deduct student loan interest. That was a lot, and thankfully we were joined by 4 amazing panelists who are going to be able to speak in even more detail on kind of the what and the why to these policies. So I'm very glad to introduce you to Representative Janet Ansell, the chair of Committee on Ways and Means in the Vermont Legislature, Peter Chen, senior policy analyst with New Jersey Policy Perspectives, Kevin Amirasani, a senior tax policy manager with the Office of State Planning and Budgeting in the Colorado Governor's Office, and Hala Ahmed, VP Policy Communications with the Jain Family Institute. Thank you all for being here so much. Representative Ansell, if I could start with you, as the chair of the Ways and Means Committee, to use a horrible cliche, I was wondering if you could possibly walk us through how a bill becomes a law, and discuss, what inspired Vermont's legislation, what were the goals you were hoping to achieve, and how did you convince your fellow legislators that this was the right policy for Vermont?
Thank you. And thank you for doing this. I love to have the opportunity to share some of what we've been able to do successfully in Vermont. Hope other states are able to do it. I come from many years chairing the Ways and Means Committee. I used to be tax commissioner, and many, many years ago, I was a student at University of Denver School of Social Work. And that was about 50 years ago, at a time when Richard Nixon was proposing his family assistance plan, I think was the name of it, which was kind of a guaranteed annual income or universal annual income. And it was a proposal that was it was current when I was in social work school. It sort of evolved into the earned income tax credit because of the work requirement that was needed to get bipartisan support. But I never forgot it. And 50 years later, chairing the Ways and Means Committee and sort of watching from that perspective what was happening with the pandemic and what was happening first to our state revenues, which of course with the lockdown were tanking, and then watching what was happening with the federal child tax credit and the impact that that had on revenues as a whole, but also the impact that it had on families. I have I have grandchildren, I have members of my family who were able to take advantage of it, and certainly knew a lot of people who did. And I remember thinking when it first was implemented that it was frankly, it was brilliant. It helped families and it helped the economy, and it was just a terrific idea. As the feds were beginning to phase it out, a lot of us were trying to think about what we should do, to sort of make up for it. And at some point, I read an article about a couple of states that had state child tax credits, and I thought, I guess maybe we could do that. So 10 months later, that was signed into law. It was an idea that came to me. Other people had it. I was in a position to try to make it happen. I can talk more about the politics of it, but basically the bill, usually when we introduce a bill, particularly out of Ways and Means, we have offsets. We don't spend money. And in this particular instance, our revenues were so strong that I decided that we would just have a bill that created the credit and let someone else figure out how to fund it. So it, it was a long story in terms of getting it passed, but there was a lot of support for it. And I feel very, very positive and very confident that it's going to make a difference for people.
Excellent. Thank you so much, Representative Ansell. Peter, if I could bring you in New Jersey in. So New Jersey started with a very generous and has had a pretty generous EITC for a long time. So what inspired New Jersey to add a child tax credit, and how is this possibly fit into a broader affordability campaign in that state?
Sure. And thanks, Richard, and thanks for having me. I think the impetus behind the child tax credit in New Jersey really came in the aftermath of our off year elections. We have odd year elections, and the Democratic governor and legislature had much slimmer margins than were anticipated, including the loss of our longtime Senate president to an upstart Republican legislator. And so there was a lot of conversation about shifting to sort of kitchen table issues and talking a lot about affordability. Everyone was saying affordability this and affordability that. And our perspective was, well, that's great to talk about affordability, but who is the state affordable for? Or who is it least affordable for? And in this case, you know, really is families with children that bear a lot of the brunt of the costs of living in New Jersey, especially around childcare, but also housing, healthcare, transportation, et cetera. And so the idea behind, you know, the child tax credit also had to do with the timing of the federal. You know, every legislator, every elected official in New Jersey had basically done a tour of trying to get their constituents to apply for the federal child tax credit and talk about how great it was to have it. Well, what a perfect opportunity to create it at the state level when it seemed like it was unclear whether the feds were going to extend their child tax credit. So I think a lot of the creation of this child tax credit had to do with timing. You know, actually, when I was at my previous employer, Advocates for Children of New Jersey, I had worked on proposals for a child tax credit that basically went nowhere. And instead, you know, the focus was on modifying the EITC to try to include young adults. But because of the confluence of events, you know, it was just the right time to make a play for a child tax credit. And, you know, there were obviously trade-offs, which I understand you want to talk about more later. But this felt like the right opportunity to get cash directly in families' pockets in a way that was both politically viable and that addressed some of the shortcomings of the EITC, right? Because the New Jersey credit does not have an income requirement. And so therefore the full amount is available to people even in very low income ranges, which in the EITC, they would qualify, but only for a relatively small amount. So I'll pause there because I know we have a lot to get to.
Awesome. Thank you so much, Peter. Kevin, in Colorado. Colorado has been very busy, and I actually know personally that you have been very busy with tax policy over the past few years with the big changes to the EITC and now the CTC. And so I'm wondering, given like the incredible amount of achievements and work that's gone on, you know, what kind of laid the groundwork in Colorado and what obstacles did you have to overcome to turn this into policy?
Thanks, Richard. I'm happy to be here. To understand the Colorado experience, really, you have to understand two pieces of context. First, we have a constitutional amendment called the Taxpayer Bill of Rights, or TABOR for short. It's one of the strictest revenue, tax, and spending limitations in the country. What that meant effectively was we had to pair our expansions of our state EITC and creation of our state child tax credit with revenue raisers. And so what we did was we paired it with a variety of provisions that modified or eliminated some income tax and corporate income tax, individual income tax and corporate income tax, tax expenditures. And use that money for the credit expansions. The other, as you mentioned, is the huge amount of groundwork we spent on this. And I think a lot of the work actually goes back to 2016. In 2016, there was a team created in our state auditor's office whose only goal was to evaluate all 200 plus of our state tax credits, deductions, exemptions. So the groundwork had been building for some time. As early as 2018, Governor Polis, shortly before taking office, mentioned also that one of his planks was going to be tax reform. So revamping our state tax code to make it more equitable and make it more fair for filers. So as part of that process, as early as 2020, we created a state tax study group. The governor chaired this group. Actually, you and Kim from the tax policy were crucial in this process. We brought together people from the business community, academics, local governments, state legislators from both parties. And we spent 7 months learning about our state tax code. So it wasn't necessarily, the point wasn't consensus knowledge issues, it was simply learning about who claims these tax credits, who benefits from these deductions, how is our tax system overall administered. And eventually, so that meant when we, a year later, introduced our bill, House Bill 2113-11, we were ready. We were ready in the sense that stakeholders knew what was in the bill. They had learned a fair amount about how much money we're giving away through what many would call to be tax loopholes. So that made the job much easier. And of course, we did pair it with some income, individual and corporate income tax expenditure reductions so as to have a revenue neutral, close to revenue neutral bill. So that was sort of how the groundwork was laid, and sort of the last 6 years worth of research and analysis around tax expenditures that got us here.
Excellent. Thanks for those unnecessarily kind words, Kevin. Hala, you work with a national organization, and so you were able to oversee all three efforts, plus have an eye on the other 47 states. So generally, what do you see as the pros and cons of state EITCs and CTCs? What do you think could come next in terms of state policy? And what do you think should come next in terms of state policy? Where do you hope to see these conversations going over the next few years?
Thanks so much. So great to be on this panel with such expert folks. This is a question we're trying to answer ourselves, and why we were prompted to have a lot of conversations in recent months, especially to talk to legislators across 7+ states, advocates, policy analysts, and get a clearer picture of cash assistance programs that came up in the past year, especially after federal cash assistance programs were sunsetting. And we were interested in learning more about the different design choices, specifically Colorado, New Jersey, Vermont, and other states made in structuring their cash benefits, because we wanted to know to what extent that those similar instruments that were being used, the tax credits, reflected a common approach to expanded safety net policy, or whether they were sort of very differently conceived. So we were also interested in whether these policies were fundamentally conceived of as cash programs, as opposed to more routine, although certainly significant, tax relief, and then how much the idea of guaranteed income, which is a particular focus of JFI, was present as a term or as a framework in these backdoor and advocacy perspectives on these bills. And what that portends for the future of cash policy. So I don't need to rehash the parameters that you went through around Colorado, New Jersey, or Vermont, but I did want to highlight a few ways that we saw variations in these approaches and what we think they indicate. We've seen upwards of 10 states expand tax credits at the state level and put cash back in families' hands or reduce their tax liabilities. But there were a lot of different approaches to this expansion. To some extent, there were states where, as we saw between just these three on the panel today, a different focus on age ranges, kids under 6 versus in other states focusing on kids under 18. A focus on expanding eligibility to immigrant children, ITIN expansions particularly, and then also very different approaches to targeting. So some states focusing really heavily on probably federal poverty levels as a benchmark for those most in need and those who should be targeted by these tax credits, and some really having a broader approach to those in need, particularly in Vermont, for example, where the eligibility thresholds extends, pretty high up the income levels, up to $125,000. And then we see really different amounts used across the states. So, $1,000 benefit is very different from $180 or $300, between the state and federal benefits. And I think what we see is this state-by-state variation shows that while there's this common tool, the tax credits, based on a baseline of federal benefits, perhaps a percentage of the federal benefits that's being used, it seems that the goals and the political will behind the legislation at the state level is often founded on very different notions and constraints. So, in some states, we didn't see child tax credit expansions, but we did see one-time tax rebates that were offered. And they were a response to higher than usual revenues, and perhaps, a response to a very simple, relatively simple mechanism to drive tax dollars back. But we also see, folks using the child tax credit and the failure of the federal expansion to continue as an opportunity to drive open a wedge of long-standing efforts to expand eligibility at the state level to the social safety net when it comes to expanding to I-10 kids. I could go through a bunch of examples, but I guess the last thing I'll point to is that we also see that it is by no means clear that the framework of guaranteed income is being used across every state, nor is the framework of child poverty alleviation being the dominant frame for all of these states where we see these tax credits implemented. And that raises a lot of questions about where it's going next and to what extent we're seeing a shift towards cash-based social policy more broadly, or less conditional, less burdensome safety net and cash policies more broadly.
Awesome. Well, thank you so much. And thank you, everyone. And I kind of want to open up the questions to the rest of the group, and I'll try and also involve some of the questions we're getting from the panelists as we go through here. I guess I'll start by doing something that I hate, which is taking a state panel and asking about the federal government. Because, we mentioned that, in Vermont and New Jersey, the child tax credit is independent of the federal, but Kevin, in Colorado, it's a percentage. The EITC is typically a share of the federal credit, which means that you're following their rules, but there have been important changes. I think we mentioned I-10 filers is a really important change. How do, again, anyone can jump in here. Do you view your state's relationship with the federal government? Are they a partner? Do you have to work around them? And given the uncertainty in the tax code at the federal level, how does that come into these equations?
I'm happy to jump in as a former tax commissioner. I can tell you that for years we've been working hard to become more separate from the federal tax system rather than closer to it. Because frankly, they're not always reliable partners. They change the rules. And when you're too closely tied, those rules then flow into your own system. EITC is an exception. We've had a fairly generous EITC for a very long time, and getting it up to 38% is great. But it never occurred to me to tie our child tax credit to the federal one. So I'm interested that that's what Colorado decided to do.
I can speak a little bit here too, if that's possible. We are in Colorado, we are one of the most tied states, coupled states to the federal income tax code. So we're one of only 3 states in the country that starts our tax code with federal taxable income, unlike most states that start with adjusted gross income. So from the get-go, we are very, very coupled. There are some benefits to being coupled. I think when you couple your tax credits or tax policy writ large to the federal tax code, it's easier for taxpayers to understand, to calculate the percentage of their credits, because you have your EITC, your federal EITC, for example, credit calculation handy. It's also easier for departments of revenue to administer. With that being said, as Representative Ansel also mentioned, we did make some policy choices though around increasing eligibility. So we thought it was really important for I-10 workers to be able to claim the state EITC. And so even though the feds weren't doing it, we went out of our way and made our state tax credit process a little bit more complex to be able to let those individuals claim the credit. And similar for the child tax credit, we felt it was unfair that children without Social Security numbers are penalized by the federal government, and those parents aren't able to claim the federal credit. So at the very least, for our state credit, we did make that choice to decouple slightly.
I would also say that one of the ways that we see states responding to the, the federal child tax credit expansion was, perhaps seeing it expire and wanting to continue that benefit and the lower poverty rates more broadly. But there's a key difference in a few states, I think, that's worth raising, which is that, linking to the federal benefits program leaves some potential conditionality within the benefits program. And I think what we're seeing as an open question for state legislators is whether they want to mirror that conditionality. Mm-hmm. So, in the case of EITC expansion, yes, states may have, New Jersey may have expanded to a larger percentage of the EITC, or California almost doubled its EITC percentage at the state level. But those are, historically still labor-based programs, means-tested programs where you have to have a baseline of income. And I think that might be a limitation for states that want to continue linking to the federal program, including Colorado, for example. If this expanded CTC with $0 in income required to receive it becomes the norm at the federal level, folks at the $0 in income in Colorado will continue to receive that child tax credit. But if the political environment changes, regardless of what the political will of the people in the state level is for that expanded benefit to folks with $0 in income, you won't see that benefit reaching them. So I think that's a clear sort of departure point that states have to make a decision about.
Awesome. We had a somewhat related question from one of our audience members who, if I can paraphrase, are there any other policies that we should be including in these conversations, specifically as you start to make them become laws? In that, how will these policies affect a filer's or resident's, marginal tax rate? Will these interact with any other programs that are phasing in and phasing out around similar levels? How can these programs be used advantageously to work with other public policy programs you might be trying to work with to achieve similar goals around affordability and such?
So I think one sort of unanswered question, and one that that the feds are also working on, is outreach. We saw that non-filer take-up rate was pretty low. I mean, depending on how you define low or high, but there are plenty of people who are non-filers who did not claim their federal child tax credit, and they were primarily in the lowest income brackets. And this continues to be a problem for a variety of reasons, and it's even more pronounced at the state level. In a state like New Jersey, where the threshold for filing is actually lower than the feds. And so I think outreach is going to continue to be an issue, and also a big opportunity, right? Where you can theoretically combine outreach for other programs with outreach for free tax filing, and also with beefing up tax filing itself. So that's one thought that comes to mind.
If I can jump in, one of the concerns that we had as we were developing the Vermont CTC was to make sure that income wasn't used to disqualify somebody from other federal benefits. And that's not a simple thing to do. We think we did it fairly successfully, but there were a couple areas that we're still a little bit concerned by. So that took a fair amount of time and attention in committee. And I think it's a continuing issue that if states begin to move in this direction, that there need to be, ideally the feds would act and make it clear that this cash didn't disqualify somebody. But if they don't, we need to work around their rules, and they are fairly complicated. So that's an area where some expertise would also be very useful.
I could briefly mention something on the outreach side, as Peter mentioned. We have a pretty robust outreach program in Colorado. It's run by our public health department. Isabel Dixon, who leads that effort, will thankfully be joining us in the next panel. But we definitely found a lot of success in working with the IRS, working with our volunteer income tax assistance sites, figuring out a way to boost filing capacity, especially for non-filers, as you mentioned, people who might have filed consistently but haven't filed for 3-4+ years. They're often elderly. Making the process more simple for them and directing them towards free tax prep resources. And also, I would say, partnerships within state agencies were crucial for us. So there obviously is a lot of overlap between SNAP recipients, TANF recipients, child care benefit assistance recipients, as well as those who claim these tax credits. So there are often silos within state government. There are strict data confidentiality provisions that sometimes make this data sharing difficult, but it's not impossible by any means. And we've had good success with working with our human services departments on sort of bringing these types of data together so we could have a better idea of where to direct our outreach.
And do you find that those outreach efforts are kind of universal, or do you have to create special outreach? I'm thinking of ITIN filers, and if there are specific, benefits to expanding it to the ITIN, or if there are also specific challenges to trying to reach ITIN filers who might not have a relationship with the tax code because they're not eligible for federal credits.
I can jump back in here quickly. ITIN filers are the hardest segment to reach for sure, and they're kind of our targets within our outreach program. It's also very difficult because the IRS's requirements around applying for an ITIN and renewing ITINs are often difficult for folks. You have to have a certified copy. It's not a simple copy of your home country passport, for example, or you have to go to certified acceptance agent. And most of our certified acceptance agents are commercial providers. There are a handful who are free tax prep centers. We're trying to increase that number through our funding, through our incentives. But the process of reaching those segments where there's often distrust is very difficult. I agree.
So if I can take this in a slightly different direction, I think everyone on here is very pro CTC, pro EITC. You know, we're discussing the benefits of it, and for a reason, because there's a lot of benefits. But did you find, was there opposition to these policies? Were there people in these states when you came to them and you showed them the data who simply didn't agree, or maybe didn't understand, or, you know, outright opposed it? And what did you learn, or what are you learning from, you know, other groups that might be opposed to these types of policies, and how did that affect your policymaking and your kind of decisions on policymaking going forward?
Well, I can talk about it from sort of the political perspective, sort of what the issues were in the legislature, and our income cutoff is generous. We got pushback from people who thought we shouldn't have a cap at all, and pushback from people who thought that it should only be available to low-income families. So I guess we looked at that and thought, well, maybe we're in the right place if we're getting pressure on both sides. You know, the other thing that happened, and the reason why our bill turned into something of a Christmas tree, is that people had other priorities for the money. If we had money for tax cuts, and we believed we did, there were people wanted it to go to seniors, or they wanted it to go only to low-income families, or they wanted it to go to childcare, or they wanted to go to education, and so on. So you know, I've always learned over the years that sometimes the worst thing is to have a lot of money, and it's easier to make decisions when you don't have any. And there just were different priorities. There was nobody who said this is a bad idea. They just said we our idea better.
So one thing you notice about a number of these credits is they are targeted towards young children. And I think some of that has come from pushback about both cost and also about, you know, unfortunately, there remains, you know, narratives around the deserving versus not deserving recipients. And as children get older, it's as though they're somehow more culpable for the fact that they're of their family income, which is just not the reality. But, you know, we had sort of two proposals that were included in our original report. One for an all ages tax credit that would go up and include young adults were not included in the original federal child tax credit. And we received negative feedback on that from a variety of folks, including some of our partners, who indicated that, you know, this would be better targeted towards younger age ranges. Again, there are good policy reasons as well. Family incomes tend to be lower in that age range because of life cycle, right? But and there's tends to be less state aid to that population as well because of they don't receive funding for K-12 schools. But I think a lot of the trade-off there did come from this perception that somehow, you know, young children were an easier sell as far as how deserving or not deserving their families were. Again, that's unfortunate because kids don't become less expensive when they turn age 6, it turns out. But you know, that is the sort of political reality that we ran into.
Representative Ansel and Kevin, were there similar arguments about the age cap? It's interesting that it's all the same cap, all younger than age 6.
Yeah, in our case, we actually had our state child tax credit on the books since 2013. It was, however, linked to a federal bill passing, which never passed. It was never implemented, activated till last year. That initial bill that got that in our books in 2013, there was an extensive stakeholder engagement process around it. We didn't really want to recreate the wheel. People were used to it, albeit it was unfunded. People were used to it still. So we chose to keep that credit as is, keep the age ranges as is. I mean, the revenue aspect, as I mentioned, we have a taxpayer bill of rights. Our hands were very much tied in revenue. So we had to make sure this was a relatively revenue neutral bill. That was part of the calculations, but on the whole, we wanted to keep it as advocates and people were used to.
Yeah, to some extent, we kept it with young children because there was a lot of pressure to do more for, particularly for childcare. And this was a way of at least putting money in people's pockets which they could choose to use for childcare if that's what they chose to do. So we also expanded our support for childcare subsidies as well. The other thing is that when we started the bill, it was actually a year older. It was up to age 7. And I knew that we needed room to compromise. And that's the principal place where we compromised, was reducing the age.
If I just before we finish moving on to another topic, you mentioned that, one of the reasons some of these got enacted is because states saw this, great influx of money. As you said, maybe more than too much than they had wanted what to do with at the time. And we're now kind of in a volatile, possibly a more volatile environment coming up. Do you think this is a place where policymakers might go and change the eligibility rules if they need revenue? Or do you think this is something that will kind of be boxed out from those conversations? And bring the EITC into that maybe also, are these permanent parts, or are these also going to be on the table the next time the state needs to go looking for money?
Well, I hope it's boxed out. But I think the reality is that this, because it's the last in, it'll be one of the ones that it gets discussed when we go into another recession, which we certainly will. When the Senate passed the bill, they actually made it temporary. They had a sunset of, I think it was 3 years. I can't remember if it was 2 years or 3 years. And they did that because they said, well, we're going to have a recession and we don't want to make this commitment knowing that a recession is coming. And my argument was, if we have a recession and we have to make tax cuts, this is not where I want to go. I don't think we ought to put children with families with young children sort of first on the block. So we ended up with no sunset, and this is permanent or indefinite, as I like to say, not permanent, but it's the last in. So I think it will be it'll be tempting to reduce. One of the other things I want to say is that the high income level actually really doesn't cost very much, because families with really young children tend not to be at those high income levels. So you could reduce the income quite a bit and you wouldn't save very much money.
I would also say that I hope that our credit expansions are permanent. One of the ways we were able to help sell them, there wasn't a ton of opposition in the end, was by linking to the studies. It's very clear that the EITC encourages the number of work hours, encourages work, improves family economic security, even reduces things like recidivism. And also, we were thinking about this bill well in advance back in 2020 when we thought we were in a revenue crisis. Most states probably did too. And one of the arguments that was really beneficial was this is a very high ROI. The marginal propensity to consume as a consumer goes up a lot the lower down the income brackets you go. And so we were able to sell this to some extent as a stimulus measure at the same time. So I think for those reasons, it's going to be difficult to pare them down afterwards.
I would have been a lot more confident saying that it wouldn't be pared down afterwards if the feds hadn't blown their chance to extend child tax credit. But there is precedent, unfortunately, in New Jersey. Governor Christie, during the previous recession, pared back the EITC percentage of the federal match. So it's not unprecedented. But again, I do think that it will be difficult to try to pare these back, given the sort of proof of concept of cash assistance for a broad range of families. And it'll also be an easy political. I'll note that during the passage, I did not expect this at all, which is that during the budget hearing and during the final passage of the fix bill, which fixed the tax year for eligibility, Republican members of the New Jersey legislature were, very expressive about the shortcomings of the child tax credit and not being big enough, that it had to include more families, that it had to be a higher dollar amount. So, again, I was surprised, but if that's the direction that the child tax credit is going, and again, I think the evidence is very strong coming out of the federal, then I think it'll be harder to pare back.
And I realize Vermont is maybe somewhat, we're not unique, but we're different. But the child tax credit bill was signed by a Republican governor, and we had bipartisan support. Not that, it wasn't 100%, but we certainly had bipartisan support for the bill as it went through both chambers. And EITC tends to be strongly supported on a bipartisan basis in our state anyway.
Yeah, I think this is something that brings up again the state by state variation that we've seen. It would be very different for a state that chose to do a fully refundable program unconditional, regardless of $0 in income, versus a state that did have an expanded child tax credit or EITC program this year, but which was not fully refundable, and sort of mirrored the federal benefit, and the different constraints around budget. But the other piece that I think might lead into the next panel really well, we'll learn from folks then, is how much child advocacy organizations, or basically recipients, have been part of the advocacy for the legislation at the state level. We've seen a lot of variation in this, state by state. In Illinois, which had a much, did not pass a state level child tax credit, although one was proposed. You saw a lot of parent voices involved in advocacy for some forms of cash assistance in the past couple of years, but they ended up with an expanded EITC, which was not fully refundable. New Mexico saw stronger advocacy from community-based groups and did pass a pretty robust state level CTC. And I think, there's probably Kevin and Peter alluded to some longstanding efforts from child advocacy organizations to rope in the CTC as part of their existing campaigns in the past year. So there was sort of this longer arc. And those kinds of advocacy infrastructures play a big role, I think, in what we might see going forward and how sustainable the programs will be.
Yeah, and Holly, let's pivot to going forward and optimism again. I think something that's always worth bringing in these conversations is that, and my colleague Elaine Mogg has done a really good job of talking about this, some modern families don't fit our tax code. If the parents aren't married and they have disparate levels of income or changing levels of income, or different members of the family care for different children, it can be hard to deliver credits to them. Do policymakers need to get more creative? They need to start thinking about ways to supplement these things, or do you think that these are still the best options we have on the table, and that we should kind of double down on them?
This is a big choice that I think policy advocates and folks like ourselves need to investigate in the coming research that could be done on the state level child tax credits and benefit systems as they've expanded in the past couple of years, because we saw the IRS really almost going through an overhaul to try to reach more families who were suddenly eligible for unconditional cash benefits. And yet we still know that many families were not reached, despite, sort of all engines on with different advocacy organizations trying to do outreach. So I think, I would say that the tax system and even unemployment insurance system, very different thing, but just to say, state level social safety net infrastructures have kind of had to, get their gears oiled a lot in the past couple of years. But we don't know, if they are the only option going forward. I think a lot of folks have proposed, are there ways that we can do data sharing, Kevin alluded to, between different public benefit agencies, so that folks can automatically enroll or be reached more easily if they're accessing SNAP or Medicaid or whatever it may be. And I think those are avenues, states can explore, as well as pushing for, federal reforms that are in a similar vein.
One of the other areas that we struggled with a bit was the timing of the credit, and we ended up doing it the way we typically do credits. So it's a true up when you file your taxes, or at least during tax filing season, if you're a non-filer. But one of the things that I thought was so great about the federal credit is that it went out monthly. And I don't know whether there is going to be, it was difficult for our tax department to administer it, and I understood that. But I think having a more regular payout is going to be critical in order for it to actually take root and really provide the assistance that we want it to provide.
I'll give a small plug to my hometown. The District of Columbia is going to try to deliver a monthly credit. It's from the EITC. It'll be after the fact, though. You'll go file your taxes. You'll get a share of the EITC, and the rest will come out in monthly. And so, at the least, hopefully that'll be an experiment for us to learn from and see the benefits of. Our panel has about 4 minutes left, and so I just want to leave you all maybe closing statements. And if you maybe, if you went to a state that doesn't have a generous earned income tax credit or child tax credit, if you have advice on how to get these enacted, how to discuss these programs, or even if you just think that there are priorities, you should go for this first. You're brought into that meeting. What would you tell them and advice for going forward and achieving these goals? And why don't we go in the order we started off with, starting with Representative Ansel.
I just muted myself. It's hard to offer advice to another state when I know how different the political climate is in that state. This kind of thing is relatively easy for us in Vermont. And I don't know that I have, I think the obvious thing is look at the impacts in the states that have moved in this direction. We've had EITC, really quite a generous refundable EITC for a long time, and look at the impact that it has on families. But at the same time, you're talking to states that are struggling with education, and they're struggling with jobs, and they're struggling with housing, and they're struggling with healthcare and so many other things that I wish I had a really great answer, but I'm not sure exactly what the right motivator is going to be.
Start. Peter?
One thing that is, again, I want to echo Janet's framing here, which is that states have very different environments, particularly politically, and it's very hard to offer advice. And as a state advocate, I sometimes am annoyed at other states offering advice for a very different, political landscape. And again, in New Jersey, we have relatively friendly political landscape. But one thing that was helpful and certainly would be helpful in any future campaigns that we have is having options available for different sort of flavors and levers to pull within the credit, as well as relatively quick turnaround for modeling, potential changes. At the very last minute, we were asked, okay, how much would it cost to add, this income range? We just had to run a number and figure it out. And so having that kind of quick turnaround was really important, especially in New Jersey's sort of mad budgeting process. But yes, I would say having options available and having all of various scenarios gamed out was certainly helpful in identifying what the optimal proposal was to get across the finish line in this legislature.
I love last minute revenue scores so much, and we'll give a nod to the revenue estimators that do great work in all of our states. Kevin?
I would say if revenue is not a concern, these credit expansions should be no-brainers. If it is the concern, like in many states, I would say the pairing process is important. So figuring out what tax expenditures to reduce to pay for EITC, CDC expansion. A lot of states' revenue departments put out annual reports or biannual reports talking about how much tax expenditures cost. A lot of states' auditor departments or legislative branches also have similar research on detailing and describing the revenue impacts and the beneficiaries of various tax expenditures. A lot of these are on the books for decades and people don't often know about them. So there are ways to successfully pair progressive expanded tax credits like this with eliminating tax loopholes in a way that makes sense. And we try to do so in a pretty bipartisan way with a robust stakeholder process. And I think that's replicable in many states.
Awesome. Hala?
Yeah, I would say, learning from the past couple of years, to me, all of these, state-by-state variations and crop of programs raises a question of how much farther can advocates or, folks interested in more robust social policy get if the North Star is more no strings attached cash or public benefits as part of the safety net, rather than, smaller tweaks to historically burdensome programs like perhaps SNAP or TANF. And then I also think, we don't see guaranteed income being perhaps the dominant language used to describe this crop of policies, although we would, at JFI, we would call it guaranteed income, cash assistance programs. And I think, it's up to advocates and policy experts to make that connection to regular income support programs, insofar as it does expand that horizon for effective anti-poverty policy. And the last thing is sort of a question for my fellow panelists and folks to think about is whether we can see these programs moving beyond just the frame of tax relief, particularly because that notion of taxation as a burden can perhaps sometimes counteract the long-term efforts to fund these robust safety net policies through tax revenues.
Perfect. Thank you so much for that. I think it's a great transition to our next panel. And thank you all for this one. I think we're going to bring you back, so don't worry. But with that, I will gladly hand the baton to Marjorie Sims of the Ascend at the Aspen Institute for the second panel. Thank you, Marjorie.
Great. Thank you, Richard. What an excellent panel. And I so appreciate ending on Hala's comment, pointing us to the North Star. So I'm going to welcome, our panelists back as I introduce them. First, Isabel Dixon. She is an economic mobility specialist at the Colorado Department of Public Health and Environment. And Elisha Wagner, she's a manager, policy and advocacy at Clayton Early Learning, and also a tax ambassador for the Colorado Fiscal Institute. Queen X is an alumni member of the Family Voice Council at the Colorado Department of Human Services, and welcoming back Kevin Masari, a senior tax policy manager, the Office of State Planning and Budgeting, Colorado Governor's Office. So welcome. Our effort is to go deeper into Colorado to really understand, as Kim actually pointed out earlier, it's how to make all of these benefits more accessible to all families. And I so appreciate that the Urban Institute recognized the importance of bringing in parent and family voice onto this panel. At the Aspen Institute for Ascend, we truly believe that best systems change and policy is designed and made when you first focus on and listen to the voices and expertise of parents. So, but before we get started, I'd like to ask our panelists just to share one sentence about themselves, and I'll start with Kevin.
Thanks, Marjorie. I'm Kevin Amirasani. I work on tax policy in the governor's office. So anything that touches tax, whether it's tax credits or administration, I work on.
Thank you, Kevin. Isabel.
Hi, thank you. Glad to be here. I'm Isabel Dixon, the Economic Mobility Specialist at the State Health Department, where we are working to connect more Coloradans to services that improve economic well-being, such as expanded tax credits, because of the tremendous impact that economic well-being has on mental and physical health outcomes.
Wonderful. Thank you, Isabel. Elisha.
Hi, everyone. I hope everyone's having a great day. I'm Elisha Bonner. I am Policy and Advocacy Manager at Clayton Early Learning, and I myself am a parent. I've been a part of parent programs for tax, earned income tax and CTC, so I'm so excited to be here.
Wonderful. Thank you. And Queen, welcome.
Good afternoon, everyone. Thank you so much for having me. My name is Queen. I'm a community-based nonprofit here in Laramie County. I'm excited to be here.
Thank you. And I'm going to start with Elisha and Queen, really centering our conversation on, if you could share with us specifically, what were some of the tax benefits that you received over the last year, and how did they benefit your family? And how about Queen, we start with you.
Sure, thank you so much. So yes, I have children, and I was blessed to have gotten the earned income tax credit. It's kind of funny because it worked for my family well. It was that extra funding that we needed, being a person that navigates different systems like SNAP and Section 8 housing and things like that. So when I thought about the earned income tax credit, it was a little different for me. I felt it was a lot more reparational when we think about the historically how folks weren't able to support themselves. I think about how this particular set of money supported me, supporting my children that are not with me. So I have a son that is in prison, and he's a young man. Unfortunately, he couldn't be out here to work and help support my family. So when I got the earned income tax credit, I was able to support him where he's at as well, along with my family that's here. So I think the earned income tax credit looks different for different families. It just depends on where you're at.
Thank you so much for sharing that, Queen. And if you wouldn't mind, let's go just a little bit deeper into how did you actually use those resources for your family? And how did it impact your family's well-being? You could share a little bit more.
Sure. One of the things I was able to do was purchase a vehicle. That was huge. It wasn't actually just the vehicle. It supported me in maintaining my bus. I have a bus because I do support my community. So I needed that, along with buying clothes. You know, it's some of the simple things, but things that are major in the lives of families. So when you think about clothes for the season, and young person's self-esteem and things like that. So that's how it helped me maintain transportation for my family to move around the city, and also for me to get the work done through my nonprofit, supporting more families in my community and building up my children's self-esteem.
Thank you for sharing that. Really important to know a little bit more of those specifics. So thank you. Elisha, can you share with us the types of benefits that you received as a result of, the tax changes that happened in Colorado? And then how do they benefit your family?
Absolutely. So I did receive the earned income tax credit and the CTC credit. Both times came at a great time for me and my two girls. I am a single mom, and even though I have a busy schedule and an amazing career, I have to budget because I have two little girls I'm taking care of by myself. When I received these benefits, it was time where both of the girls decided to grow on me. I'm gonna give you a little story time. It was one of the school weeks and we woke up, I already had their clothes out for the whole week. I was like, oh, I'm doing so great. I'm doing team mom on my side. I got everything ready. I'm getting them dressed, like, all right, get your clothes on. My oldest, who is going to be 10 next month, she was just laughing and I couldn't see her. And I'm like, what are you laughing at? And she's like, Mom, look. She walks out of her room and her pants is literally capris. Now, this is around this time of like, it's cold outside. She has capris on when they're supposed to be all the way to her ankle. Her shirt is too tight on her. And then I'm like, okay, we got to find you some clothes. Let's get that on. Once we got her some clothes she could fit on, I'm like, okay, get your shoes on so we can go. We're, time crunch. She can't fit any of her shoes in the closet. There's like 10 pairs and she's like, I can't fit it. It's too tight. So that amount of money that I received did help me to buy a whole new wardrobe for her. I mean, that was unexpected. I was not ready for her to grow up everything she had. And just to have that extra income come in was just so beneficial for me and my family because I didn't have that in the budget that month. I had already budgeted out for all my bills and for all their extra activities that they were a part of. And just to have that extra credit, that funding allowed me to get what she needed and she wouldn't be walking around looking crazy for the rest of the month. She did have a little cute get up that she thought she was so cute with. She had some rain boots on, some leggings and a long sleeve shirt, but she was happy about it. So was I, but it did help me to make sure she had everything she needed for the rest of the month.
Thank you so much for sharing that specific story, Elisha. And that's the reality of parenting, right? Kids grow and you have to adjust and navigate your budget accordingly. So thank you so much for sharing that. So in our conversations as we were preparing for this, we really wanted to share with the audience that, there are very strong structures and strategies to make certain that these benefits are accessible to all families. First, you have to be thoughtful in the design of the policy itself. you have to make certain that you're advocating for these policies, and then you must make certain that you're doing strong outreach and delivery of these benefits. So I want to, center our next, portion of this conversation really on how are parents already engaging in Colorado to make certain that the policies or these benefits as they're being designed, how is that happening in Colorado? And Queen, I'm going to ask you if you wouldn't mind going first to share, your perspective, having been on the Family Voice Council for the Colorado Department of Human Services, and then we'll, come back to you, Alicia.
Thank you. I hope I'm answering this right because you went kind of long, but
sorry about that.
No, you good. So I feel like being part of the Family Voice Council and having that direct connection to persons that are able to advocate for me, I think it kind of works. It works well in my favor because when they are coming to the Family Voice Council, they definitely have their listening ears on. They're not biased. They're just listening, and they're able to take back what I'm saying to make the policies that are needed for my family and my community. I've been a part of the Family Voice Council over 2 years. I'm alumni now, and I can honestly say that I've seen my words come to fruition through different actions and policies that present presenters have come to the Family Voice Council and gotten our feedback on. So I don't know. I hope I answered your question right.
You absolutely did, but I'm going to ask you to expand just a little bit to share what is the structure of the Family Voice Council. We know that it is an entity that's supporting the Department of Human Services, but how many, parents or family members are on it? How long does it last? Are you compensated for serving in that role? How does it work?
Yes, the Family Voice Council, I think we're about 4 years old. I started it at its inception. We started off with about 20 people, and it goes up to about 20 people, anywhere tentatively from 15 to 20. Yes, we are compensated. We went to being virtual during COVID. It's $20 an hour. And it's set up where we are inside of the state building, the CDHS state building, where all of the processes that support our families are held. I thought, for one, that was awesome because it gave me a sense of, honestly, privilege and power. It allowed me to feel like I was right there, being able to make sure that what was going to happen in my life happened. And we are able to be in a room, the 20 of us. We have presenters that come in, whether they are from social services, Veterans Affairs, child support, SNAP, early childhood council, any process that we have to deal with navigating systems being low income. We have presenters that come and they present to us what they want to bring into our communities. And then we have the opportunity as community partners and stakeholders to say, hey, hold on. I don't know if you need to bring that to my cafe. You need to change your verbiage because that's going to offend me and things of that nature. So it just works well. I think the Family Voice counts. It's a 2-year position. And after your 2 years, you're allowed to stay on as alumni.
Got it. Thank you. Very, very helpful. And so I'm going to bring in Alicia's voice here, because you also have been involved in advocacy and outreach around specifically how do families access the benefits. So how about if Alicia, you share your expertise and your experiences?
Yes, so here at Clayton, part of my position is to co-lead our Clayton Community Ambassador Program. And our Community Ambassador Program consists of parents, staff, and community members. And we partner with organizations like Colorado Fiscal Institute and become tax ambassadors. We participated in courses to focus on understanding taxes and how to advocate for a better tax code, and understanding that there is underlying racist stigmas embedded in our tax policies, and what we can do to change that. We also teach our ambassadors how to advocate for themselves and their families and their communities, how to tell their story, and how to talk to the people they need to talk to in our legislation, and to tell them what they need, because we are the constituents, we are the people they're working for. So we have testified about earned income tax and CTC and why it's important for our families. We have told our stories. We have done LTEs. We have done podcasts. We have been in articles. We have just been out here advocating. Our ambassadors are amazing, and we have been on the floor, grassroots, and telling our stories of why this is important.
Great, thank you so much. And I'm going to ask Kevin to come into the conversation, because we've heard, from Queen how being on the Family Voice Council helped shape, kind of policies for the Colorado Department of Human Services, and now from Elisha in the work that she's doing, making certain that family voice is involved in all different types of benefits. But from your perspective, Kevin, having worked on, these tax policies, how are you getting information, from, families, from parents, from constituents about what is working or not for them?
Thanks, Marjorie. With our tax reform experience, in some ways, it was easier than it could have been, because for half of the credit expansions we've been talking about, the child tax credit creation, activation, that had been on the books already since 2013. In the run up to 2013, the Colorado Fiscal Institute, the Bell Policy Center, some other local think tanks and progressive advocacy groups do great work in the fiscal space here, had a pretty extensive engagement and feedback mechanism, which resulted in those two organizations strongly supporting the child tax credit expansion. So we're able to benefit from that, even though that was on the books for a few years, by simply activating that credit that our advocates have been advocating for, and parents and recipients have been advocating for quite some time. What I can commit to is moving forward, we will do a better job with more directly incorporating parental feedback. We did use lots of research throughout our investigative process, research from the Tax Policy Center, Center for Budget and Policy Priorities, Institute for Taxation and Economic Policy. A lot of their research was from the perspective of how to best get individuals claiming these credits. Where are the issues around accessibility, around tax administration? So it was fairly robust, and we hope to make it more robust next time around.
No, thank you. Thank you for that, because I do think that there are lots of different ways that, states can be thinking about engaging, the expertise and recommendations of, families, parents, and beneficiaries, those people that they're seeking to support. So Isabel, I'd love to bring your voice into the conversation as thinking about the work that you all have done, focused on outreach to make certain that all families, have, access and, benefit from these changes in policy. So can you share about the work that you've done?
Yeah, thank you. So again, I'm from the State Health Department in Colorado, and we're focused on connecting more Coloradans to tax credits and tax filing, again, so that they can improve their economic well-being and health outcomes. And we've heard about all these amazing policy and tax credit expansions in Colorado, New Jersey, and Vermont. But hand in hand with those policy changes is the effort to help families know about the opportunities so that they can take advantage of them. Large state agencies like the health department already have lots of networks and programs that are focused on benefits enrollment and can help get the word out. We're also partnered with other agencies like Human Services and the Department of Revenue to increase our reach even more. So there's some big levers we can pull out there. For our outreach, we have a campaign and a partner toolkit to help more families and those who work with families know about tax credits and the power of them. And basically what that looks like to partner with these programs who are already working with families is that when programs are referring to WIC and SNAP and TANF and other benefits, they can also connect families to thousands in tax credits. These big agencies are in a position to reach a large number of filers, but we have to hear from community members about what the challenges are so that we can make sure our communication is effective. What we see on the ground in Colorado as we do tax outreach and training, and also what we hear from our volunteer income tax assistance partners at the point of filing, is that the complexity is intimidating. It can drive potential filers to paid preparers where they don't get their entire refunds because they have to pay the preparer, or not to file at all. So complexity is a real barrier. And it's also a barrier for navigators and care coordinators in feeling comfortable in talking about taxes. So we really want to focus our outreach efforts on non-filers. We see a lack of awareness of eligibility, especially among those who don't earn enough to owe tax, so they don't have to file. So they don't realize that they're eligible. We see also concerns of engaging with the IRS, concerns with filing incorrectly or using filers who are filing services that might be fraudulent. And also the concern that other benefits might be impacted. For those who can apply using tax ID numbers or ITINs, there's also a lack of information on how to get an ITIN number. So anything that can be done to simplify the process and provide clear and less intimidating information is helpful, preferably in multiple languages. Family engagement has really helped us understand some of these top concerns and has informed our outreach a lot. We've engaged with the Health Department's Community Advisory Board, which is live interpreted in Spanish, as well as the Advisory Board of the Office of New Americans in Colorado. And these boards have been a source of input on our tax outreach campaign materials, and again, on what questions and barriers communities might have about tax filing.
Thank you so much, Isabel, for sharing all that. And I am curious, how much of what you just shared in terms of your outreach strategy was already in place before these new benefits were accessible to families? Did you have something that you could build upon, or were you kind of creating this as the opportunity arose?
Yeah, there was already quite a robust tax outreach campaign called Get Ahead Colorado that had been doing this great work for decades, and we built upon that. And then when the expanded federal child tax credit came online, we really turned our attention to getting the word out about this new CTC. We also engaged new types of partners with other state agencies and, again, programs, local public health agencies, and other programs that were already reaching families. And we tried to make sure that our information was up to date and that it was culturally competent and accessible. And in multiple languages, actually up to 11 languages, the most common languages used in Colorado.
Thank you. Thank you. So Alicia and Queen, as you're listening to some of the challenges that Isabel raised, are there other insights that you might have from your advocacy and your work with other parents that you think deserve some attention as we continue to try to make certain that these benefits are accessible to all families?
Yeah, one, for the parents that are on, government assistance like SNAP and TANF, sometimes the awareness, when they have case managers, at times the case managers might not be the same within the same month. So just making sure that communication is open and everyone knows what's going on so they can get that information, because the people who should be giving that information to the parents and the families at times may not have the information themselves, or they're not allowing their parents or families to know about the information as much as they should.
Wonderful. Thank you. Queen.
Thank you. I don't know if this is a tax or a court thing, but I would like to see, only from my own personal experience, I would really like to see something set up where if I have the children like Elisha, I am a single mother and grandmother, The fact that I have the children all the time, I hate that the non-custodial parent hurries and files and claims the children before I do, because that hurts me. And in this case, the parent is married and doing their thing with the family. And I, unfortunately, have to fight with the IRS and prove who I am and prove where the children are at, because the non-custodial parent filed before I did, and it just made it bad on me. So if there was a way that the tax system would be able to support families navigating that part of the earned income tax credit or even the child tax credit, I would like to see something like that. I think that could even move forward generational wealth if things are done right. Thank you.
Yeah, I appreciate your raising that and, kind of highlighting for all of us how sometimes siloed these systems are. These different policies might stand alone and sometimes in contradiction with each other and not aim for the right, goal. But I'm wondering, Isabel or Kevin, anything that you would like to add on, how to be thinking about stronger outreach or design in connecting these systems and challenges?
Yeah, I can jump in. Queen raises such an excellent point that uncertainty of custody and who is going to file, who has the child for 6 months or more. This also happens with grandparent caregivers, can create a lot of uncertainty and confusion and complexity. And, as outreach partners, we have to work with the system we have. So we've just tried to distill the information down into clear language for both navigators and families, and then know where to send them if there is a dispute or something that's gone, a conflict between the parents, where they can go to get correct information and to take it up with the IRS. But it would be infinitely better if this was easier to navigate and not so complex. Also, mechanisms for online filing, do-it-yourself filing, and just overall simplified filing portals, like some of the pilots with Code for America and the Get CTC simplified filing portal, can really help families file themselves, do so quickly, do so with a minimum of documentation needed. And anything that could happen in this space is helpful.
Wonderful. Anything to add, Kevin?
Sure. Yeah, I think we think about this a lot in Colorado. We have based on 2018 data, which is the most recent, we have the 4th lowest EITC claims rate in the country. So that's a huge problem. Anecdotal evidence suggests we have big claims gaps for the CTC and our child and dependent care tax credit as well. One issue that comes up a lot is for ITIN filers. On top of this difficult process where you have outreach and then hopefully linking the outreach to free tax assistance, whether at VITA sites or at commercial preparers or elsewhere, you have this parallel process where if you need an ITIN, you don't have a social security number, you need an ITIN, or you had an ITIN but need a new ITIN, there's a somewhat onerous process for applying for individual tax ID numbers. There's a huge delay in processing these. And sometimes the interplay between, I applied for an ITIN with the federal government, I'm still waiting on it. Can I file my state tax return? In the meantime, these questions are difficult to answer and they sometimes vary state by state. So to the extent we can make the ITIN process easier for the big chunk of non-filers who would require ITINs to claim these credits, that would help everything.
Very helpful. Thank you. Thank you. Really appreciate that. So Colorado is often lifted up as a model for other states, and the way in which you have the Family Voice Council engaging, the voices of constituents and parents and families in the design and structure of programs and policies. So I would like to ask both Queen and Alicia, as we close out this portion of the conversation before going to Q&A, if you were to give any advice or guidance to another state or parents in another state that are interested in a family voice council or doing outreach and advocacy around policies and programs, what advice or guidance would you give?
I think the advice I would give would be find a leadership program. I found the Family Voice Council by way of the CSU's Family Leadership Training Institute, FLTI.
CSU is what CSU?
Family Leadership Training Institute, FLTI. And it's through the CSU extension, and it was a 20-week program that my sons and I engaged in, where we, at the end of it, we were to develop a community program. And yes, and after we developed our community programs, it gave me passion and drive. And I started my 2 nonprofits. And then I started my DEI LLC. And by that way, I'm able to support the community that I live in, the city where my children and grandchildren were born. I can support them in being better, in supporting my family being here. So it's like, help me, help you, help me, right?
Yep. Thank you, Queen. Really appreciate that. That's like building social capital, right? Along the way. Elisha.
I love that, Queen. For me, for us to continue to make change, we need lived experiences at every table. It's just, that's what we need. We are not able to implement change and do better in our communities and do better around the world if people with lived experiences does not have a voice. And for the parents and community members that feel like they don't have a voice, you do. Your voice matters, and you need to continue to speak up, because somebody is listening and somebody is watching, and what you have to say matters.
Thank you so much, Elisha. Really powerful words. So I'm now going to welcome Mary Bogle, who is a I'm sorry, Mary, you are a principal research associate at the Urban Institute. You're going to lead us through a Q&A.
Thanks, Marjorie.
Sorry about that, Mary.
No problem. I am so thrilled with the brain trust that we have on today, and so I'm butting in here for the final Q&A, because in order to sort of pull the lens back a little bit into a realm that Hala raised at the beginning of the conversation, which is, what is the relationship of tax credit, tax policy to cash-based social policy overall? I study a lot about and conduct a lot of studies on guaranteed income at the Urban Institute. I'm the principal investigator for a number of pilots, and I've spent most of my career hanging out in communities or around the edges of social services systems, the kinds of systems Queen and Elisha advise on when they're working on the Family Voices Council of the Department of Human Services. And of course, that council looks specifically at human services benefits like SNAP, TANF, and addresses issues like the cliff effect, which we also talk a lot about here at the Urban Institute and in other realms. I know Marjorie and other colleagues on the phone or on the call today spend a lot of time on that issue as well. So one of the things I'm really interested in is sort of comparing and contrasting things like tax credit policy, guaranteed income, and benefits policy. Because in some ways, isn't it a bit of a mess? we can look at the complexity of just the tax system issues here. And then when you add the other things that are all leading to the same group of people in a lot of cases, the folks who are working hard, doing good things for their families, but still end up with low income and need additional support. And yet all these sources of support are coming at them from different directions. So I wanted to start with a question for Elisha and Queen in particular about having had experiences of a variety of these systems, both the public benefit systems through the work you do with DHS and on the Family Voices Council, you know, bringing your own lived experience and expertise into that, but also as recipients of child tax credit and EITC. Can you tell us a little bit about what your experience of both systems is like? Compare and contrast those a little bit for us. Are there pros and cons to how you've received support or interacted with either system, even as an expert?
I can speak to this like really quick, and I'm sure I'll be able to piggyback off of Elisha. When I think about the two different systems and how I navigated them and how they supported me, pros and cons, honestly, having received the earned income tax credit, I was saying to Elisha earlier, it felt better. When you're someone who navigates systems for 15, 20, and 30 years through different generations, and then you're able to, you know, sit down with a tax consultant and see that the work that you've done, you know, over the year, and now you're able to get this bonus surplus of money. It just felt better to me. It felt like I wasn't you know, begging or I was in need of this. I felt like it belonged to me. I was deserving of it. So I just kind of felt better, opposed to having to navigate, you know, food stamps and SNAP and housing, where you have people's biases and ignorance that you have to deal with, along with you know, just someone coming to work on a day that they don't feel like being there. And it's like, well, I don't know if I want to do this today. And my case sits on their, you know, their counter for a week.
Yeah.
And it looks like my children and I can't eat, or we can't go live anywhere because someone's having a bad day. So I don't know, that's kind of different. What do you think, Elisha?
Yeah, going off of what Queen said, when you talk about TANF and SNAP and housing, there's like this negative stigma that's attached to that. When it comes to earned income tax, it's like anybody can actually get this if they have children at a certain age. It's a bonus, as Queen says, something that you work for, something that doesn't feel like, oh, you're on TANF or you're on SNAP or you need help, so this is why you're getting this. It's like, it's just a positive, it's more of a positive interaction rather than having that negative stigma that comes with needing help for most families. So that's the two differences that I have seen and noticed.
Great. So, you know, and I really, that's one of the things that the benefit of lived experience on these kinds of conversations. I'm here, you know, we pulled in a number of colleagues that we informally call ourselves, hopefully formally one day, the CASH Consortium, and the JFI folks that are on the phone, the Financial Security Program folks at the Aspen Institute, Marjorie's colleagues, are also part of this coalition. And we believe strongly that looking at things from a recipient-centered perspective could move us to a more cash-based social policy frame that might be, in many ways, more equitable even. You know, and I think what you're saying here upholds that. I wanted to
I'm sorry, I don't mean to cut you off, Mary,
No,
but when you
please,
say something, when you said equitable, it stung a little bit, but it was good, because I almost feel like when it comes to the earned income tax credit, you know, we all have different lived experiences.
Yep.
So when I think about, and I know this is probably going to sting a couple people, but when I think about my children having left school and going to either juvenile detention or to jail through the school pipeline and prison system, it's like, well, at least I'm getting the money for my children, and it's not a city or a state getting the money from off of my children. Because as you know, you go to jail, the state makes money off of you. So when I have 5 sons and I'm looking at the majority of them going to jail or prison, I'm like, dang, there go all my generational wealth, whether they can either work and bring money into my family, but they're not here and the state is making money off of them. So with earned income tax credit, I'm like, well, Jesus, at least I can get some money off of the children that I bore, right? Thank you.
So what about, I mean, again, focusing on Queen and Elisha's input here, what about other members of Clayton Early Learning, other parents that you interact with on the Family Voices Council? What kind of feedback have you heard from them about, for example, the outreach issue that's been brought up today, that a lot of folks at the lower income spectrum have a very hard time even knowing about, whether it be tax credit policy or benefits? What is your impression of that and interacting with Isabel?
Knowing the awareness, it's like we need to do better as a whole, as a collective, because with some of the ambassadors, when we started to tell them about the earned income tax and what they can potentially receive, a lot of them was shocked. Like, why haven't I never knew about this? Why have nobody told me this? Even with 10th and SNAP, why didn't I not know I was eligible? Not a lot of people, a lot of families don't even know that they're eligible for these resources. So it's kind of harsh to hear, like, where is the communication? The communication is key. We need to continue to do more outreach and letting these families know what opportunities they do have to help them build and grow with their families.
Queen, in your perspective on that, why is it hard for families to find out about things like tax credits, do you think? What is preventing that?
So I think education is huge. When I think about the families that I support here in Lamar County, transportation is huge, right? One of the reasons why I have a bus, because it's easier for me to go pick up folks and take them to where they need to be. The second thing is going to be community-based organizations. As I am a CBO, they would look, hey, Queen, what's going on? Do you know what's happening with the taxes stuff? So I would love to have anyone representing earned income tax credit or the child tax credit to come into our space where we are and explain to us the pros and the cons, what we can and can't do as parents. So I think more communications with CBOs and supporting families and getting to the spaces that are doing the free filing or bringing free filing to the families.
Great. So
Sorry.
Go ahead, Elisha.
I wanted to add on to that, just knowing that we all come from different places, different environments, different communities, and making sure we're trying to make it where everybody feels welcome. A lot of families don't feel like they can be in a space to know that information, and they don't feel comfortable there. So finding ways to understand each other's language and allowing people to feel welcome into different spaces they're not usually welcome in.
Great. All right, so now I'm going to invite the rest of the panel in. There's a few questions in our Q&A lineup about some special population issues, which goes to this sort of discussion of outreach that we've started here, but also other issues. So I want to invite all the speakers including our moderators, Marjorie and Richard, to unmute themselves or we'll unmute when you speak, but put yourself on camera. And let's, Elisha just brought up the issue of one clear barrier in outreach can be language access. We know from research that Richard and Kim and others have done, and others across the country, that obviously having a same language speaker is, again, goes to the lived experience. Someone like a peer of somebody, you have tax ambassador colleagues, Elisha, who speak different languages. That's a really important piece. But that also just raises the whole question about immigrant families in general, and how we had one question earlier about going back to our first panel that's now on screen, about what the conversation was at the state level about ITIN filers and inclusion. And I think it's important for folks who are participating in the audience to understand that ITIN filers actually do pay taxes into the system, and they have, in lieu of Social Security numbers, they sign up for ITIN numbers, as Kevin has talked about. So let's talk a little bit about sort of what has been the discussion about inclusion of immigrant families, moving past barriers like language, but other barriers, and also just including them in tax credits. If there's somebody from one of the panels who would like to take that, is Janet still with us? Or I'm not getting the whole gallery right now. There we go.
Sorry.
So Janet, what was the debate?
Off. No, I couldn't turn it on. Sorry.
Have there been debates in Vermont about this subject? I know Kevin could probably address it from Colorado's perspective.
My apologies. I was trying to get the video started, and I think I missed part of your question. So
I was asking specifically about the inclusion of ITIN filers in tax credits.
So I'm very grateful for this entire presentation, because no, it was not on our list. We didn't address it, and I have a note to myself that we need to do it. So so this has been valuable just for that. So thank you.
So you've had a lesson learned too. Okay. That's great. We love to hear that. Kevin, great. Kevin, how about in Colorado? How did the ITIN discussion come up, and how was it handled? Maybe Peter has some insights too.
So the ITIN discussion actually came up pretty early on. Working with our partners at the Colorado Fiscal Institute, Bell Policy Center, it was one of their priorities. Clearly, it was also one of our priorities. I actually don't think that portion was that controversial. There might have been questions early on about, well, if we included ITINs, just as in the same way, if we expanded the credit in this way, what would the revenue impacts be? But that portion was actually relatively pain-free.
Great. And now I'm going to kick it to Steve and
Mary.
Yeah, go ahead.
Sorry.
If I could add one.
Go ahead. No, wait, oh, Richard, go ahead.
Richard. Thank you. If I could finish the loop on ITIN filers. First, I will shamelessly plug a new report from my colleagues, Luis Puig, Aravind Budpally, and Livia Lucilo on tbc.org, called Lessons Learned from Expanded Child Tax Credit Outreach to Immigrant Communities in Boston. Covers a lot of these topics. To sum it up very quickly, there are big issues that can and should be tackled by governments, and there are small issues that's just a matter of resources. I think a lot of your speakers did like a really good job of talking about having trusted partners is, it's a big difference when someone from your community comes up and talks to you in your language, using your experiences and things that mean a lot to you. And so that's something that I think governments have to do a lot of work on, and making sure that they've been enabled and empowered to go out and bring that message and have the resources and knowledge to go out there and do it. But it's also small things. I volunteer as a tax preparer during the season, and despite taking classes in high school and as an adult, I still can't speak Spanish. I'm horrible at it. And when I am dealing with a client who speaks Spanish, like, I got nothing. And it's hard enough for me to do the rudimentary kind of stuff, as opposed to, talking about tax withholding and tax credits and stuff that doesn't make sense when I talk about it in English to most people. And so you have to not only have those trusted people, but just people that literally speak the language and have them available to help these people file their taxes and communicate and walk them through this. And so I think it's very acute and direct challenges, but there are things that can be done with time and effort.
Okay, and so now I'm going to go to Isabel, who wants to say a little bit more about immigrant outreach, and then Hala too. But Isabel, go ahead.
Thank you. Just very briefly, it really speaks to the need for agencies to partner with local community-based organizations who know how to reach communities in their towns and counties. And it can be in different languages. It's usually not the state, speaking from a big state agency, who is the right entity to be there. It's partnering with local communities and towns who know where to go and how to bring the message and who should bring the message.
Hala?
Yeah, I was going to say, you know, that for some states that didn't even pass a much more robust state level child tax credit or cash policy, the inclusion of ITIN filers was a priority in the past year. I know it was a priority in Illinois, for example, particularly for the Latino caucus, and that was drawing on input from a lot of parent advocacy organizations and folks really at the local and community level to say, you know, whatever the benefit may be, we need to include immigrant families who do pay into the tax system. In California, it was a similar discussion, and I think one of the approaches was sort of treating a child's-based benefit as a wedge to say, look, like, you know, immigrant children are no different, or children of immigrants are no different from any other child in terms of their need for this kind of benefit. I know I learned from Peter as well in New Jersey that, you know, for mixed status households, you know, roughly 40% of them have children who are also citizens. So you also come up against, you know, the difficulties of really capturing some kids and not others, even within a single household, when you have some of these arbitrary eligibility constraints with ITIN filers excluded. So I think it's become an increasingly big part of the conversation around eligibility criteria. And I think that the last thing I'll say is in the past year, when it came to other forms of public benefits and safety net policies, whether it be unemployment insurance or, you know, the stimulus checks, there were conversations around how many, you know, folks with mixed status were missing out on those benefits and who were part of essential workers in a really crucial time. So we saw, you know, I know in Colorado, a benefits recovery program implemented to try to get folks, you know, essential workers a benefit who were excluded based on, you know, citizenship status, which was then modeled as well to broaden the scope of the conversation around who should be eligible for programs like the CTC or others. So I think we see it as an emerging issue. It definitely needs to happen in a lot more places.
Yeah. Peter, you had wanted to chime in something?
Yeah, and I apologize, I'm holding this baby here. So
I was wondering why you were walking. Okay.
No, so no, I mean, I want to raise 2 points. The first is about ITIN. You know, we tried, actually before we started pushing for CTC, we were trying to get ITIN included in the earned income tax credit. And we pushed for both in the same session, and the EITC conversation did not, you know, that proposal did not go through. And so it was kind of an interesting, we're not fully sure like why, but it's definitely been a conversation continuously. And it's been particularly frustrating in a state like New Jersey, which has a very high foreign-born population, and particularly among child population, where I think almost half of children in New Jersey have at least one foreign-born parent. So, you know, it's been a huge fight, but with child tax credit, and this goes back to an earlier conversation, creating the state's own eligibility rules helped to get around hanging it onto the feds. So it was particularly important there. But another thing I wanted to mention is something that's come up in New York recently had passed some language access laws around providing materials in the top 10 most spoken languages in the state. And requiring more interpretation. And New Jersey, we're trying to pass some version of that as well. That's for all safety net programs, not just taxation, but that's something to think about as well, is a more formal affirmative right to translation and interpretation. Sorry, baby.
Great. I want to put Marjorie Sims, who I've worked for years with their 2-generation lens, on the spot a little bit. And because I think so much of this conversation is touching on 2-gen principles, Marjorie, the sort of engage and listen to the voices of families, ensure equities. But I'm thinking now about the align and link systems and funding streams. In a sense, we have tax policy on the one hand that has a lot of bipartisan support, and the benefit system on the other hand that carries, and it has its own burdens. And Queen touched on some of those, the tax system in terms of, who's claiming the child, things like that. So it can be a blunt instrument. But on the other end, you have the cliff effect in the benefit systems and sort of the stigma that Queen and Elisha talked to. I'm wondering, how does, from a 2-gen perspective, which is of course serving families and children together because they're in the same households, how do you guys think about this from a 2-gen perspective? Like, what are you taking away from this conversation?
Yeah, absolutely, Mary, and I really appreciate the question. But I would go back to what I shared early, and that is our theory of change for strong policy and systems, work. And that is first and foremost, listen to and engage the voices of families, parents, or the beneficiaries. And Elisha and both Queens said that, make certain that there is representation at all, tables when you're designing these policies, when you're implementing them, when you're assessing them. And what does that look like? I mean, it is a lot of, intentional work on the part of policymakers, people within state systems, but that is the starting point. Having the ability to understand how these systems work for families, not just how the systems work, right? So that is really critical. And throughout this conversation, you've seen how bifurcated the systems are from the perspective of the parents.
Great. Thank you for chiming that in. Now I'm going to put other colleagues on the spot, Steve and Hala, a little bit. Hala, you talked about, this balance between the smaller tweaks to historically burdensome programs, or this North Star of unconditional cash-based social policy. How are you and, Steve and others at JFI thinking about that issue at this point? Where are the deficits in tax? Since this is a tax policy conversation primarily, how is the tax policy a blunt instrument, but where is it doing better than, let's say, those historically burdensome systems? What are you finding in your research?
Well, I probably can't answer the full scope of that question. It's a longer discussion, but I think that the thing that folks have realized over the past couple of years when we've seen so much increased interest in cash assistance policy as a means to get aid out to so many different kinds of struggling families and households is that, it allows for people to spend on what they need. And we know that, if you give people money and they are in the lower income level, that increases their income. And so you see a decrease in poverty levels across the board. And we know that poverty is associated with all sorts of other outcomes, whether it be health outcomes or educational attainment or, any variety of things, mental health as well. So, some of the lessons and stories that are emerging from the past couple of years from the CTC or also guaranteed income pilots that are, conceived of directly as guaranteed income is this sort of larger qualitative evidence base of folks saying, this was a way for me to get help that was in no ways putting me through the ringer to evaluate whether I'm spending on the things that I need, because sometimes the thing I need is, my kid suddenly can't fit into her shoes or the clothes that she had planned on wearing for school now that we're back in person. And sometimes it's something more simple as, food or whatever. But the point is that we can't always anticipate that. And, instruments like the SNAP benefits or food stamps have historically made it hard sometimes to figure out how to get benefits to families in need without creating a lot of loopholes or sort of barriers at the same time. So I think that's kind of what we're seeing in the lessons gained. Some states are approaching this from a much more expanded social policy perspective and really embracing this idea of cash. I would say California is an example of that. So, not only did they create a, state level child tax credit that was $1,000 per household with children under 6, heavily targeted to people with lowest incomes under $25,000, but they also expanded to ITINs, and they appropriated a lot of funds to increase enrollment across the state. They also gave people a tax rebate, to help the folks with rising prices, and they expanded their EITC. So you see sort of this larger framework push for public benefits that are just no strings attached and untargeted. But in some states, I think folks are still married to this means test. They're still married to, you have to have a threshold of X amount of income before you can be eligible. And those can work as, job work incentive programs, but they can't, they, as we know, they exclude folks who are most in need. So I think as we see the varying design parameters at the state level for these programs, we have to sort of ask how much they're really achieving the kind of low burden, high impact goals of their advocates.
Great. Hala, I love that you ended that with a question, what we can ask about. So and we've heard from Janet that she's learned something today about ITIN filing, and I'll come back to you for another key takeaway, Janet, because it's great to have a state representative in a panel like this. But Richard, as a researcher in tax policy, did you learn something today? Is there a key takeaway that you're going to take forward in your research and to say, oh, let me look more at that? I'm going to ask everybody for one thing they learned or would take away forward.
Yeah, I would just be more humble. I think it was interesting when we asked about like the state, what would you tell other state lawmakers? And everyone said, I would tell them, be careful what they say because they don't understand my situation. And I think when we had the parents on, their situations are very personal too. And I think you should always be probably a little cautious when you want to make sweeping claims about this is the state policy for this group. Yep. You're talking about a lot of people, and you really do need to make sure that you're communicating and translating that in ways. I forget, was it maybe Peter was talking about levers. Levers are, letting people have the ability to make changes, to personalize it, to achieve the goals that they're actually trying to achieve is probably very important.
Yeah. How about you, Elisha? What do you have a key takeaway from today? Something that you want to bring into your work with the Family Voices Council or as a tax ambassador, which it's interesting how you're working both sides of the equations we're talking about today.
Yes, just by seeing both sides and being a part of both sides, finding a way where we can continue to collaborate them together to bring it all in as a whole.
Great. And Queen, what about you?
Can you repeat that for me, please?
Just what's your key takeaway from today? What's going to stick in your mind? What do you want to know more about going forward as a Family Voices Council alumni?
Honestly, my key takeaway today is, as a community-based organization, how can I be more educated in supporting my community and the pros and the cons of filing taxes and where to go, and how I can train folks that look like the people that we're serving to support them in filing their taxes as well.
Great. Kevin, how about you? Key takeaway, something you learned?
I'll tell you, there are two for me. One is reemphasizing the importance of cash benefits. And, here in Colorado, our governor recently sent out rebate checks of $750 each check, equal size rebate checks. I think that opens the door to learning about how we could better tailor tax credits from the perspective of, cash benefits, and learning what's been learned in that domain. Also just reemphasizing the importance of parental involvement. I think especially when it comes to issues of accessibility of tax credits and how they're administered, I've learned a lot in this panel, so I'm thankful.
Great. Isabel, how about you?
Yeah, I think just keeping top of mind guaranteed income and some of the pilots that are taking place. We think about tax and tax code and outreach a lot day to day, but Hala's comments about guaranteed income and how that just smooths the path, and that as a North Star, that really made an impression on me. And I want to keep elevating that in my conversations in Colorado.
Great. And since Marjorie, Hala, and Peter spoke recently, I'm going to end with Janet with the one takeaway. You get one in addition to your I-10 insight, Jain.
Oh, good. Because I guess what I'm feeling is that I think we've done a good job with the design, with the big concept. But what is really going to make a difference is how we implement this and how we administer it. And I think of the two words outreach, but I also think of listening. It's not just outreach, it's also spending time with the folks who are most impacted and listening to them tell us about how this is going to work for them, because we've got the big picture, but we need to figure out the details and make sure that the money that we want to get to families gets to them and gets to them in a positive way.
I think that's a great note to end on. As Marjorie said, let's understand how these systems work for families and not just how these systems work.
Yeah.
So I want to thank all the panelists. Great conversation today. And the cast of thousands that we have, we did it. And thank you and have a great evening. And thank you to the audience for joining us today. Bye-bye, everybody.